I was looking into some alternative investments, and I came across this thing called an InvIT. I've got to be honest, I'm a little bit lost on what exactly it is.
Right. Well, an InvIT, which stands for Infrastructure Investment Trust, is kind of like a mutual fund, but specifically for infrastructure assets. Think, highways, power plants, pipelines, that sort of thing.
Okay, so it's like a pool of money that goes into infrastructure, I guess. But like, how does it work for us, the average investors?
Exactly. So instead of buying, a whole highway, which obviously isn't feasible, you invest in the InvIT, which owns and manages those assets. The income from like toll collections or electricity sales is then passed on to you as a dividend.
Ah, that makes a lot more sense. So we're talking about real tangible things generating income. Is it like getting a tiny piece of a highway?
That's a great way to think about it. Yeah, it's kind of like owning a fraction of those assets and you get a cut of the earnings they produce.
Hey, that's pretty cool, actually. So these envies, like, what are some of the key things about them?
Well, first off, they focus specifically on these income generating infrastructure assets. Secondly, you see a significant part of that income goes to investors as dividends, which is nice for steady returns.
Makes sense. What about like trading them? Can you just, buy and sell them like stocks?
Yes, actually, that's another key point. They are listed on the stock exchanges, which makes them fairly liquid. They are also regulated by SEBI, India's securities regulator, which provides a bit of security.
Oh, okay. Regulation is good. That's important. So it's kind of like a safer way to get into this kind of investment.
Well, it's more transparent, perhaps. InvITs also have like a two-tier structure with a sponsor and a trustee that look after things.
So the sponsor is, I guess, the one that initially owns the assets, right? And the trustee is like, well, a referee making sure things are fair.
That's right, exactly. And, that leads us to this IPO thing, which is basically the initial launch of these units.
Ah, okay. So an InvIT IPO, it's like when an InvIT first sells shares or units, whatever you call them, to the public, right?
Spot on, yeah. Just like when a company has an IPO to offer shares, InvITs do InvIT IPOs. That's their way of raising capital to acquire infrastructure.
So it's the first chance for regular people to get in on these kinds of investments. It's not just for, big institutions.
Yes, exactly. It is the first chance for everyone to get involved and own a slice of these infrastructure assets.
Okay. But what should I look for in the IPO information, like that prospectus thing you mentioned?
The prospectus will tell you all about the InvIT structure, the assets they hold, potential risks, and all the other crucial details investors should know.
Right. It's like the fine print for investments. So how do they, decide how much to price these units?
The price of these units is determined by a few things like the potential income, the assets can generate, what the market's like right now, and investor demand. It's a balancing act.
Okay, so it's not just random, it's, I guess, based on what it's worth. Then after the IPO, you can just trade them like any other stock.
Yeah, exactly. Once they're listed, anyone can buy or sell them in the secondary market.
Okay, so I guess that's pretty liquid and easy, right? Now, what makes these NYTs and IPOs like a good idea?
Well, for one, they have the potential to offer regular income, that dividend we were talking about. They also give investors access to the infrastructure world.
Yeah, I see how that's useful. So it's kind of like adding another tool in the toolbox when trying to build a portfolio.
Exactly. And they're transparent and fairly liquid. Plus, there might be tax benefits, but you would need to check with the tax advisor about that.
That's good to know. That is important. So it is not just rainbows and sunshine. Are there, any downsides?
Yeah, it's not a risk-free investment. The underlying infrastructure assets can underperform, which can affect your returns, and the price of the units can fluctuate with market conditions.
So it's kind of like a roller coaster, right? Up and down depending on the market. So it's important to understand the actual assets of the InvIT first, right?
Yes, exactly. It's essential to really know what the InvIT is investing in before putting your money into it.
That's a good point. I guess it's not a black box. You need to dig into what you're investing in. So just to summarize then, an InvIT IPO is the first time these infrastructure assets are available to us regular investors.
That's a great way to put it. And these InvIT IPOs allow you to invest in something beyond traditional stocks and bonds, giving you access to real infrastructure assets.
Right. And like you get the chance to diversify into infrastructure and hopefully get some regular dividends from these things?
Yeah, exactly. And like we said, they are liquid and transparent, but definitely not risk free.
Okay, I get that. So, like, I need to do my own homework, understand the risks and all that before investing.
Precisely. Always do your due diligence, understand the underlying assets, and assess your risk tolerance. And when in doubt, you can always talk to a financial advisor.
Okay, that's a lot to think about. Thanks for walking me through this. So, now what I'm wondering is, are these InvITs actually a good option for all types of investors or just a niche group?